Franklin Red Jr. So he is one of our partner. He's our partner in the US, and he had been into the field of financials, intermediation, and so on. He's an expert mainly in this field, like what I said on the group, and he's the founder and managing partner of Embassy Capital and Abrahamic Capital. So please welcome Mr. Franklin on our webinar. So introduce yourself.
Well,
to
I thank you everyone for joining tonight. I'm very excited about this because this is something that speaks to what technology is providing to us, is the opportunity as individuals to begin to assemble and through collective action, finance projects, support economies, and grow. And it's been something I've been, over the last 3 decades involved with from an institutional standpoint, and over the last decade and a half, really on the basis of promoting global self-directed investment, so that individuals anywhere in the world that wants to or have a desire to finance a project anywhere else in the world, we should have the ability to do that. Because technology presents that opportunity for us. I'm excited to be here tonight. Just as a little background for myself, I got my start in the mid-'80s. I was first registered in the securities industry in 1986, 1989 at a mortgage banking platform that stemmed from my experiences with the precursor to HSBC Bank that was in America, and that was Marine Midland Bank. I'm born and raised in Buffalo, New York, so I'm very excited to all of my Canadian, friends and family, because I grew up walking across the bridge, shopping at Camiso's, and Canada was to me as much a part of my growing up experiences as a young person as the U.S. And I believe in cross-border relationships. So this is definitely an example of what I think is a great experience. My role in banking, my initial role was that as a commercial banker and investment banking. I was very much involved with the securitization process, did a lot of leverage finance work in the late 80s, early 90s. I've always been in mortgage servicing, residential as well as commercial real estate. That has always been a part of what I always thought was necessary as comprehensive financial planning. So wealth management from the standpoint of financial advocacy for the client's interests was certainly a center of how I was trained, and it is very much a part of how I function today. Over the years, I had the experience to work with a broker-dealer firm on the exchange. I had the ability to help launch unit investment trusts, which, mutual fund type investing. I'm a former New York registered investment advisor who, after multiple years, abandoned the status and launched the debt issuer, back in 2007. And I've basically run a private debt desk for, since then. And my focus really in the recent years is that of an independent sponsor who focuses on global self-directed investment or foreign direct investment that is either institutional, family office oriented, or individual. And financial intermediation, finally has evolved to a level where technology allows individuals to do what institutions used to be able to do. And so I believe in the power of the democratization of finance, and I think we're there today. What we're certainly involved in here at Omara is, I think, a cornerstone for how we will, one, make the transition to having digital capacity in our financial centers, but also to make individuals the center of that, or at least individuals having power through that. So it's pretty exciting for me to be here, and I'm glad to meet you this way, electronically and hopefully in person.
Well, thank you so much for that, Franklin. So I remember when the first time that we met, that was last year, and that was around May or July. I believe that was during the Abrahamic Business Circle. Yes, when I was doing a speech about OmaraPay and how the tokenizing the payments so during this time when we first met, what was the first idea that comes into your mind when you hear my speech back then?
Oh, wow. Yeah, Advisors were advocates of their clients' interests instead of just brokers or agents of a transaction.
Yeah.
And so I saw that, right away what you were offering.
Oh, thank you. Thank you for that. So when it comes to your years of experience on investment banking, what were the difference back in the 80s compared to right now in the present? Maybe you can share them, those other differences back in 30 years ago when you first started investments and banking side as a regulated financial advisor and compared to now in the present. So something that could open up their mind, the difference between before and after.
Oh, sure. Well, the first thing, when I was brought into the industry, there was a heavy focus on advocacy.
Mm-hmm.
And the notion of your financial advisor being the proactive participant, suggesting to you options and things, versus what the financial services evolved into was a regulatory compliant type of, let me tell you what you qualify for versus what you can afford.
Yes.
You can see that play out in the mortgage industry, which, if the secondary market is providing the capital, you have investment banking providing capital for mortgage banking. And in mortgage banking, if you can qualify a person for, let's say, a $400,000 mortgage, because you don't count the real cost of maintaining a house, property taxes, you could take that out of the equation for some, underwriting types. You could take the insurance cost, the utility cost, the operating costs of real estate. And so you're artificially qualifying a person for more than what they actually can afford when you're looking at the metric of the monthly payment as just a percentage of gross income. So in the sales process, if the sales professionals are receiving a percentage of the transaction, they're incentivized to approve you for as much as possible and then get the trade as much as, as high as possible. So a lot of people were put in situations where they could qualify for financing, but yet the affordability of it was not really the focus of the disclosure between the investment advisor, where in the 80s where I was trained, that was a very important notion in the underwriting decision, was to sit, branch managers would sit with local business people. And if the branch manager couldn't extend the loan because the business wasn't quite in the posture, they would help the business person make decisions to get in the posture to qualify. So when the lending decision was taken away from local bank branches, that means the credit understanding that could be explained to business owners so that they can have directions or milestones to operate their business, and that information was taken away from the business people.
I see.
So the industry fell away from being an advocate of the borrower, as we became less and less community bank based or community investment bank oriented. So now we have money center banks that are not of that local market. So the use of capital isn't as closely aligned with the success of the economics of that market. It became less of a advocate. And when we look at the securities industry, the role of dealer, the role of broker, the role of agent, those all can work in a sense in opposition to the client's interests, because the moral obligation to the advice to the client was eliminated from the consideration, and just the ethical, the legal is now the basis. So back when there was a relationship dynamic, this has become less relational in the role of wealth managers, of lenders, to the actual interests of the local community. And I think that's going to turn back when we, begin to really exercise the democratization of financial intermediation, because now individuals can compete with money centers. Back in 2008, I was able to onshore superannuation money from Australia, from individuals, that we were able to finance real estate transactions without going through money center institutions. And that has now just accelerated. I think Canada has RSPs that across Canada, people are very effective in terms of managing, and now bringing cross-border opportunities. This crypto intermediation is going to really open that up. Very much so.
So maybe you can share more about what makes you like the tokenization to our community. What makes you believe that tokenization could support the financing, the lenders, and then the borrowers and the real estate market industry when it comes to these facilities?
Oh, I think we now finally have a complete vertical in terms of funding an idea at one
Mhm.
stage,
Yes,
and then funding the plan that contains the idea,
yes.
and then executing the plan.
Mhm.
So at the shelf token level, an idea can be basically raised, capital can be raised for it by the sale of a token that the smart contract uses that revenue to, for the basis of that idea. People can support an idea. The actual support to develop an effective plan can happen, at the next level. So when a share token is issued, then again, we can across, wallet to wallet or across exchanges raise capital. And then so the pre-ICO, ICO, IPO connection happens where, thought becomes a plan, plan becomes an executed business.
Yes.
And that business then produces the opportunity for multiple asset tokens that, the business has produced that can be directly invested in. So intermediation, that movement of capital can be at the risk level or the knowledge comfort level of the actual investor. And as the investor gets comfortable with the process,
Yes.
they then are in control of their wealth and how their wealth can be directed to building the community, in which they live in, as well as support communities that they're a part of that's anywhere else in the world.
Perfect. So do you have some other intention to use OmaraPay in the US when it comes to, let's say, some of your investments? That's true.
So if we're limited to gold on the camel's back, we're not going to have a big economy.
Because before it was labor and heavy, and then moving it from one place to another will take years before you pay.
I got paid in silver one time, and it was like the Canadian maple leaf. I got paid in silver one time.
Silver.
They're beautiful.
Yes.
They're beautiful.
Okay.
And they're stacks of 25, I believe, 5 of them in a yellow brick, look like a giant Lego. And after
you can see the video.
9 of them stacked up in my car.
Wow.
And I'd much rather preferred, tokens sent to my wallet. Coins sent to my wallet. And but long as the value arrived, it could come as gold, silver, it can be paper, whatever it is that I can convert it. I'm okay with it. I'm not stopping any of it. But my preference is to get it digitally, because now with cold, this cold storage, as I share with you, I'm an old world banker holdover from the generation. So I can take my cold storage device, put it in a jar and bury it in my yard. Now I've like done both sides of my feeling good and comfortable about the safety of my value, the wealth. And I think that it's a tough time because fear and scarcity and lack is pushed to make people make decisions. But this conversion we're going through is going to add capacity. And as we get capacity added, then you can function for the betterment. The human experience and the ecological alignment. We can finance that, which means we have these great tools, these great financial tools that we can use to improve the quality of life and community, quality of experience.
Absolutely.
And no other generation of humans have ever had the chance. We have now at the pinnacle of the best opportunities that ever existed.
This is actually, we're creating a pioneers, or we are technically the leaders of the next millennia, because if you look into the history of money, yes, we are doing the currency before as a bartering stage, but do you know that every time that there is a problem on the banking system, or there's a problem, there's a war is going to happen, there's an ongoing war, a new currency is always being introduced. The topic about the CBDC, which I know some of the people here doesn't really understand fully what CBDC it's all about. So CBDC, it means central bank digital currency. So they plan to execute their own digital currencies, which will be used by the global ecosystem, which is technically impossible, because this is why some of the mayors or governors, I believe in Florida state, right?
Yeah, well, the governor of Florida.
Yes. Yeah. And he was totally against it. And then there are others totally against it. It is because of number one problem, which is transparency. And second, how are they going to prove that the amount of the value of this is actually doing some sort of conversion? And currently right now, I believe you personally experience it yourself with the banking side, right?
Yeah. It's funny. DeSantis is saying the people leading the government can't be trusted with the power of central, digital banking, right?
Yes.
So it's not a problem with the intermediation, it's a problem with the leadership he doesn't trust, because this is a powerful tool. And then the next part of this is America was formed when the colonies consolidated their debt into the federal treasury. That was a condition of it.
Yes.
So the aggregation of the total debt created the basis of what is the unity of the nation, that economy, the interdependence. So how can a state operate without federal, currency being able to come in and be used, within the state? Is because any state that would not want the commerce that the nation, has produced, is got to put its state at a disadvantage in terms of the economic engines that are available.
Exactly.
So we need to not have the conflict lead the dialogue, but we need to talk about the use case and the effectiveness of it, and how this is going to give us capacity to manage, the economic growth of the nation. And it, of course, the role of government, in that has to be consistent with the benefits of the people, not the benefits of just the political, patronage system. So this is a great opportunity that we have as merchants to take the commercial republic that the United States is, and at our global economy, and as merchants to create opportunity, produce sustainable jobs that are redemptive to the ecology of our planet. And so as a merchant, I look at this group here, all the skills and the variety of abilities, the things that will come out of these intellectually intimate conversations where you're honestly talking about ideas, and then take those ideas to actual plans, and then use our money to implement it. There was, when let's say we're starting America all over again, but we have the internet. When they started America, they had slave labor and the printing press.
Exactly.
So with the internet and collaborative, cooperative, economic interdependence, we can make a more perfect union, because each cycle, each time a generation comes on, they should make it better. It's excellence. If we're excellent in our planning, and if we as merchants are taking care of, the needs of a community as if trustees unto them, then sustainable business that promotes the human experience with the tools that we have available, this is a great shot.
Exactly. So I believe you have already experienced the OmaraPay wallet over the last few, I think almost a month now, right? During your experience. Because guys, just to let you know, we have done some series of beta and alpha testing stage with their group of Embassy and then Abrahamic Capital.
Yes.
Their group are actually using right now our OmaraPay wallet. So during this stage of that you are using this wallet, what are your insights or something you can share to them with your experience on using OmaraPay wallet?
Oh, excellent. And, deploying the technology at any level of business. So business is fractional, and it works at levels, and you become increasingly sophisticated with experience. So you gain confidence. And I'm able to use in the formation of the teams, the ability to place hold with the token and just say to a professional, look, I'll redeem this when the transaction funds. So, one of the title companies that I've been working with for over 25 years has always been great for closing transactions, and especially those difficult transactions where there were title issues or custody issues. And so now I can, with that title company as third-party escrow agent, I can say to professionals, let's collaborate on a project. Here, I'll issue these to you in your wallet, and I'll redeem them from the proceeds of the transaction, third-party escrow. So when the investors feed the escrow, we get a simultaneous closing on the transaction, and all the professionals are paid. Because over the years, I've had times where even closing attorneys representing my debt issuer would try to, in their client trust account, my client trust account with them, hold my money so that they can have benefit of it. So this is where we can create third-party initial contact relationships between professionals, where we're saying up front, we're going to position the representative value in a third-party custodial scenario so that when the deal gets funded, so the note that I float to the private investors, when that funds from the investors in escrow, there's disbursement instructions with the custodian to settle right then, instant settlement on pre-structured deals. because we can pre-position the professionals to do the work to make the deal go better.
Maybe you could explain to them regarding a bit more in this scenario on how would the escrow could also be part of this ecosystem of how we're running the OmaraPay, how could be our OmaraPay transactions in the US could float also. So at least it gives them more better insights
Okay.
for those our US partners over there who have been waiting as well for a solution for them to be able to participate now with OmaraPay.
Well, the actual transfer of the value of a token can be basically bartered through the tokens being issued to the individual, and they pay through the escrow agent.
I see.
So the escrow agency that we have established in
can-
the US, yeah, I'm sorry, the escrow agency we have in New York, for example, can receive payments on behalf of the transaction.
Mhm.
And upon the receipt of the payment into the escrow account, the disbursement instruction could be to release it upon verification that tokens were transferred.
Mm.
So we could actually sell, shelf tokens, early tokens, and have third-party payment on it so that you have transparency.
Yes.
And the disbursement instructions to the escrow agent is really the settlement instructions.
So guys, I believe if you have some questions regarding about that, feel free to write it. Feel free to ask this question as well, because
Yeah.
later on we will be answering these questions in due time. Okay. So when it comes to our new update with OmaraPay, we have done several types of engagements as of the moment and currently, but I can see that there are some new people around here, and I can give you a brief of recap. What is Omara payment and what is USDFX stablecoin? Okay, so OmaraPay, our goal is to serve as the bridge to bridge the gap between the merchant and traditional business towards the Web3 payment solutions, because as we all know, blockchain right now is growing into the speed of light. Thanks to COVID pandemic and thanks to all of these digital transformations, all their talks and topics, it's actually a benefit for us, because right now people are thinking, where am I supposed to put my money? Should I leave my money in the bank, or should I keep it in my backyard and let it rot, or should I put it in crypto? So those are the mind right now of the most common
Yes.
people. And I believe also that there's a lot of issue when it comes to the liquidity side in the current market stage right now. That's why people slowly pulling out their funds, and then they try to convert it into Bitcoin, they try to convert it into crypto. They're looking for some other ways and options where they can keep their current savings into their account. So when it comes to this, what's happening to the market, what can you see would be the benefit of people if they switch their tokens into a way that using blockchain technology or stable currencies?
Well, one first thing is the system has to bring peace to the owner of the value.
Yes.
And so the first role is custody.
Yes.
And custody with proper registration. So the transfer agency maintains the trail of ownership. When those two things work together, then it becomes a credit decision. But if your capital is at risk because of systemic risk, that is, the system itself has lost its ability to maintain confidence of the depositors, then that liquidity issue is what's causing these institutions to have this systemic risk of not being able to operate. So the guarantee of the FDIC, it's $127 billion, the net asset before SVB, and there's 9.9 trillion of liability that's guaranteed. So fractionalization has not worked in the benefit of maintaining the risk reward balance or the risk liquidity balance in the institution.
Bitcoin into their account, automatically you will still get $100. Oh, we have 36 people now.
Okay.
36 people that are actually in our webinar today. Congratulations to everyone. So that is the advantage of our ecosystem. And just to let you know, we already have the full business model, the light paper of the USDFX ecosystem. And that one, we don't mind sharing it to the public side. And that is already the approved public version of that one. Yes, as stated before, we have until August to complete it. However, we can have in full anytime. Yes, that is correct, Gloria. Catherine tried to ask them to do to connect or click the link directly and use the password, okay? So this is a global payment solutions for everyone by connecting Milan, Europe, Italy, Philippines, US, all together, and Canada. How many Filipinos actually working abroad? We are covering more than 15% of our populations are all OFWs. We are top 1 to top 2. Technically, we're playing against Mexico and India and China and Philippines. There's only top 4. Sometimes we're top 2, sometimes we're top 1. So we are the one who's sending more money back home, guys. Filipinos are always sending a lot of money back home to Philippines. And this is actually where we are actually making a lot of money. But think about it, if you're remitting the money, you're doing trillions of dollars of transactions, and we are using our own blockchain as the nodes.
Yeah, absolutely.
So the nodes and the generation of rewards is the nodes, and the merchants are the one who's benefiting here. The people are the one who owns the blockchain. How much value does it gives it back to the people? Like what you said earlier, we're living in a debt economy.
Yeah.
Like
Yeah.
how much trillion of dollars was it?
Well, the calculations, $600-700 trillion associated with unfunded pension liabilities, national debt, and the system is, at its top. So that's why
$600 trillion.
So, yeah.
$600 trillion worth of debt, everyone. Wow. That is $600 trillion of utang. Debt.
Right,
I can't imagine that.
Yeah.
Like, how can we pay it back?
Well, you got to kick it down the road. You have to go from paper as the basis to digital.
Yes,
And
precisely.
then that gives us time to bring it back under control.
Yes, precisely. So every single day, there's a lot of transactions going on. Now that we have more than 40 people, almost 40 people in the group, each one of you are always buying food, groceries in the stores, right? All of you has savings. All of you have your own personal bank account. Maybe some of you also have credit card, but I don't have credit card, never had ones in my life. So I only operate with the cash basis or direct debit. But I learned that credit card could be a good thing too.
It's a tool.
Yes, it's a tool.
It's all a tool.
Yes. And in the US, every one of them are actually using credit card system. So based on this credit card system, how do you think we could generate good revenue by their taxation? So like how the US IRA system is working, how their credit card system would work. How do you think they could tunnel it into our ecosystem?
Well, a very powerful tool is the self-directed individual retirement account. That's what it's called in America. In Australia, it's called superannuation fund. The Kiwi funds of New Zealand, the tax treaties afford the citizens of countries to be able to save money on a pre-tax basis. So if you could put money in a savings account without paying taxes on it, then the economic value is going more to savings. And
yes,
now because you can self-direct those assets, it became that's sold in the business.
Yes.
If you're financing inventory for another business,
yes,
now all of a sudden you can share in the value of that liquidation of the inventory. If it's a distressed asset purchase, if someone gets an opportunity, you can buy a performing asset. So let's say there's a hotel out there that,
yes,
40 cents on the dollar. We can, as a private group, raise capital from our IRAs, use that to create the central entity that all of us own a piece of it with IRA.
yes,
Or a financial instrument, a debenture that liens the asset. We can fund that. And in the US, the laws conformed in 2000, went into effect in 2007, where individual IRA holders had control over where their retirement account funds go, and the ability to invest in real estate, equipment, just broaden the investment decision that self-directed assets could do. I mean, even into equity. So a self-directed IRA what happens is the IRA becomes the owner in trust for the beneficial owner. So the IRA becomes the owner of the retirement assets that can be
Yes.
invested without a tax incident. So in the
Mhm.
US, if you had 100,000 in your 401k or IRA, and you wanted to use that for an investment that was in your local community, if you took the money out, you'd pay a 10% penalty, you'd pay taxes on the money you brought out, and that would be on top of the penalty. And so
Yes.
the net proceeds is what you would have for the investment. So let's say
Yes.
if you paid a 10% penalty on 100,000,
Mm-hmm.
that's a $10,000 penalty,
Yes,
subtract it
that's a
from your
lot.
100,000. So it's now you're to 90,000,
Mm-hmm.
and you got to pay taxes on 100,000.
Mm-hmm.
So let's say you're in a 20% tax bracket, you owe 20,000. So now you're $30,000 off your gross value just in penalties and tax.
Wow, that's
But if you-
expensive. If you don't have a website, we can build it for you together with the payment system all together, or a full years long subscription together with the machine, your website, and the web integration for all different types of payments, which can be used to your own personal business. So this one is what we're targeting as well. So this is how the web payment solution is it like, and we're gonna have different types of payment integrations, of course, that will be added in the US market and Canada market. And right now, we no longer have free machines. That one is finished. So all of the machines right now is currently at $700, and we closed 2 more master franchise in the Philippines for a total of 100 machines right now is being ordered, and that's currently under process too. So all of our merchants in this Philippine side will be the first to receive the deployment, and we have now added that in our roadmap on company roadmap of OmaraPay. So before I go on roadmap, maybe you can leave me some more last final insights and how we can all collaborate together with the OmaraPay US and the group of individuals that we can also gather from the Canada and the US side on your team, on your side.
Absolutely. So we anticipate in the next day or so the ability